morning, everybody. This is Jess Riley from the life insurance team at Iams. I'm going to get everybody just a couple more minutes to get logged in here. Got a few that I can see logging in right now. So a couple more minutes and then we will get started. Stay tuned. All right. In the interest of time, it is a little after 10 here. Let's get going. I know everybody on this call, there's plenty of things to do today, but we sure appreciate you taking some time out to join us. We're going to be working with Allianz Life today and Paul Huber, kind of introducing you to the carrier and a great indexed universal life product they have available. As you know, there's a lot of opportunity in this area, especially with all the looming tax changes we anticipate coming down the line. So we're going to get into some good information about Allianz here shortly. The first thing we are going to do, though, is we are going to go through a few housekeeping items, review a couple things from Iams, and then after that, we'll turn it over to Paul and let him do his thing. First thing I want to talk about here is the Top Producer Summit. This is a huge, huge deal for all agents writing business with Iams. We are going on a Mediterranean cruise. You can see the qualification period here is going to run from December of 2020, December 1st, 2020, all the way through June 30th of 2022. What's one thing you'll notice that is very unique to Iams? We offer great incentives and great rewards trips, and we give you a longer time to qualify. A lot of IMOs that you'll be working with will have a 1-year qualification period. If you get on board with that IMO halfway through the year, it puts you behind the 8 ball. We certainly understand that, and so we like to give our producers an 18-month qualification period, sometimes even a little longer if we have certain special circumstances. But as you can see here, this one is a great one. We're going to be going to Rome, and we're going to be sailing all around and ending up in Venice, Italy. We have details at iamsinc.com, so I encourage you to visit the website. In the qualification period will be December 1st of 2020 through June 30th of 2022, and you need 4.5 million points to qualify. So any information or details you'd like to learn further about this, talk to any of your sales directors, and we can get you all of the detail that you need. Second thing, we want to hit on the new producer builders. So when we have agents that are getting on board with us, we want to make sure that they see the true value of working with Iams. So we have different incentives there, and you can see based on the qualification levels, all of the things you are able to get. Now, again, my name is Jess Riley. I'm the Director of Sales on the life side, so obviously I have a little more focus there. These numbers that you see are based on annuity volume. However, to get the qualifications on the life side, it'd be 1/10 of this number. So $100,000 of annuity production or equivalent 10,000 in life target production can get you things like a free 1,500 piece mailer, a new iPad, cash money. You get up into the 25,000 target level or 250,000 on the annuity side, you can qualify for 3,000 piece mailer or 2,000 marketing reimbursement. We got some newspaper marketing ads as well as collateral in there as well at that level. Getting up to 500,000 or 50,000 of target. Now we're talking, 5,000 piece mailers. stay at the Ritz-Carlton, different billboard ads and seminar presentations, and then jumping up to 750. Again, you can see all of these valuable tools that we have. It's all about helping you guys grow your business. We do have marketing reimbursement that we'll get into later, but this is focused on producer builders, doing things that are going to help you get in front of more clients and write more business throughout the year. So I want to make sure that you guys pay attention to this information and track your progress. We certainly want to make sure and reward you for your partnership with Iams. Another thing that we would want to jump into is our business builder portal. So some things that we provide for our agents is the referred producer program. I'm going to take a second to go through that with you. We have a lot of agents utilizing this program. It is a great opportunity for us to meet your peers in the industry, as well as for you to earn some extra cash. So anytime you refer an advisor to Iams, you get a $50 from us in cash. If and when that producer writes their first piece of business, you get another $100 in cash from us. And then the potential to earn thousands of dollars more as that referred advisor continues to write with us. So you can see how this works. When they write additional business, we pay out a quarterly bonus to you. And you can get the breakdown of this based on life target or indexed annuities, single premium life, or multi-year guarantee annuities. So that's real important. A lot of folks get excited about this and then forget that we offer it. Make sure that you're keeping this in mind. Again, this is simply for referring someone over to us who you feel Iams could help in their business. We also do have a marketing reimbursement program. So for every $100,000 of annuity premium paid, then you would get $100 in your marketing reimbursement account. If you write a $100,000 single premium, it's actually a little sweeter deal there. They get $200 in their marketing reimbursement account. And then if they write $10,000 in life target, that also is equivalent to $200 in your marketing account. So we have some nice incentives on the life insurance side here. A lot of folks have written annuities with us for a long time and aren't aware of all that we're doing on the life insurance side. And so we really want to make sure you guys are taking full advantage of Iams in all areas of business. Another key thing we want to talk about with Iams in general is the back office support. When you work with us, we do things that are going to help you to be smarter, to work smarter, not harder. So what I mean by that is we have business building tools and resources. Of course, the case design, the quotes, the expertise from the sales directors, paperless contracting, EAPs, the whole works. The one thing I will tell you is Iams has hung our hat on being the best in the service side of this business for 35 years, and that is not going to change. You will not find a better back office team. You will not get better support than we can provide for you here at Iams. So make sure you're taking advantage of that when you are working business with us. Another great resource that we certainly want to make sure you're using is our website. We have a lot of tools on the site that many advisors are not aware of and have not been utilizing. So I encourage you to register for the site if you have not yet and look at those tools. We have things like a term quote engine, also a GUL comparison engine if you need a quick idea on cost for a permanent policy. We have our forms online. We have our iGo EAP platform online for all of your EAP needs, as well as Firelight. You will find that some carriers are not subscribed to iPipeline, don't use that process. Most of those that don't will use iPipeline. So there's an EAP available for virtually every scenario that you're working. We also have detailed information on all of our products, up-to-date news as far as the industry goes, including sections for the DOL, fiduciary rule change. So again, I encourage you guys to check out that website and get the most out of that. As I mentioned, one of the tools on the site is Firelight. So this is great for our annuity producers, their ability to write annuities electronically. And again, there are a couple of carriers here on the life side that utilize Firelight as well. So make sure you're looking into that. Here's kind of a list of the carriers we currently have on Firelight and who we see coming soon, just to get you a feel for that. Most of the carriers that you do not see here that are on the life side are going to be through iGo. So again, make sure you're taking advantage of the online tools. As you know, in today's world, e-apps, expedited underwriting, all those things are very valuable. So make sure and talk to your life sales director about those things after the call today. In addition to that, we have a very robust, creative team here and creative solutions for you. Every type of turnkey solution you could want in regards to seminars, presentations, etc. We do have agency building type solutions. So if you are a growing agency or want to become a growing agency, we have things that we can help you with in that regard. And we also have a ton in the digital solutions area. So as you can see, website design, digital strategy, digital marketing strategies, social media, consulting and content, etc. So a lot we can do for you there. We also do have a creative microsite, so make sure and ask your sales director for that, so you can kind of go through and meet the team and see all of their specialties and areas of expertise. Another tool that is available for Iams agent is the Retirement Analyzer. I am sure you guys are all familiar with this software. It's one of the best programs in the industry to really help take a client's plan out of their head and put it to the test in the software program to make sure the retirement plan they have is going to get them where they need to go. As you all know, most of the time, once we stress test some of these plans, we can find areas of opportunity to help the client improve their strategies, and then of course make you guys some additional sales out there. So make sure and ask about this. This is a great tool that we make available for our advisors. The other thing I want to hit on is the Iams Wealth Management team. We do have a team that certainly can help you with your assets under management type of business. So make sure that you're looking at those folks. If you do have your Series 65 and you're looking for an RIA platform, we have a great outlet for you here with a great team of folks. They have been growing at a very rapid rate over the last few years, and we anticipate that to continue on. So some of the key points here is obviously to help you increase your revenue, improve your client retention, and strengthen those relationships. Even if you do not hold the Series 65 and are interested in talking to Iams Wealth about how they can help you on some of that potential business, give them a call. Okay, there's some different programs we have in place where you don't necessarily have to have a license to help your client with some managed money solutions. So the sales directors are all listed here. Again, my name is Jess Riley. I'm the director of sales on the life side. We also have Tony Butler and Justin Ford. We are all here to assist you guys on your life insurance needs. So quickly, take a look at our email addresses, write down that 800 number. Make sure you're leaning on us. We certainly would love to do some things to help you guys grow the life business this year. You can also, of course, follow us on your social media platforms, Facebook and LinkedIn. We've got the email addresses here. We actually have Tony's LinkedIn here. You can search for Justin Ford or myself as well. So that kind of takes us to my portion. I'm going to actually turn the presentation over to Paul here. We've got Paul Huber from Allianz Life. Again, Paul can tell us a little bit about himself, but we've been working with Paul for a number of years. It's a great resource at Allianz and a great carrier to work with. So I'm going to turn this over to Paul and kind of let him do his thing.
Thanks, Jess. Appreciate it. And good morning, everybody. Bear with me as we do the cumbersome change here and get things pulled up. Let me know when my screen looks okay. You can see my presentation up.
Yep, I can see you there.
All right. If you want to take a moment, guys, and write down my information, you can see Paul Huber at AllianzLife.com, my cell phone number. I've been with Allianz going on 19 years here as we start to roll into April. done everything from in-force and service side of things to spent 5 years on the sales desk running thousands upon thousands of illustrations, and have spent the better part of the last decade in sales and training as an external wholesaler, working with agencies like Jess, working with agents like yourself, just training specifically on IUL when it comes to Allianz. Today we're going to do this CLIMB presentation. It's an acronym we use to kind of talk about where we shine when it comes to IUL in general. As you look at the acronym itself, you're going to see we're going to have company strength, loans flexibility, indexing, marketing, the tools that we have, and then also the bonus options. And quite frankly, the bonus options at the end can be kind of an interesting point now that we're a few months past post AG 49 and the changes that we had coming. So we'll have to cover that and talk about it. But the key to remember is, although those regulations changed our illustrations, the products themselves remained unchanged, and they're still doing great things for our clients out there. So let's dive in. Let's talk about, before we get going, here at Allianz, we really have one product. It is our Life Pro Plus Advantage. It is an indexed universal life policy. It does what we're talking about what life insurance should do. It should give you that death benefit protection. But we talk a lot about the accumulation potential inside of these products, right? This is not a low-cost product. This is not a current assumption type product. This is not a GUL. It truly is designed, in most of our cases, fall under that overfunding, minimum death benefit, maximum cash accumulation, show income coming out, whether it's for college planning, whether it's for paying for life-changing events, whether it's that supplemental retirement gap, Jess was talking about with that analyzer report tool they have. The product can do all of those things, and also some of the living advantages like chronic illness rider or terminal illness rider, that sort of thing. So where we fit in is cash accumulation. Going back the 15 years that I've been in life insurance, we did have term coverage, we did have GUL products, and really what we found as we kind of came through the years is we're not great at doing all that other business, right? Term, you have to be extremely cost effective and process the business quickly to get it through, where we were finding it took us just as much money from a new business side to process a $50 a month term app as a $50,000 a year IUL app. So we decided, let's be really good at one thing. We looked at what we've been doing for the better part of 2 decades on the annuity side and said indexing is really our key. At Allianz, we have our own internal hedging desk. Let's leverage that, and let's have one of the best cash accumulation index products that's out on the market. And really, I think that's where it's come up with, and what we've come up with, and really what we've had now going for the better part of almost 10 years with the Life Pro Plus version of this policy that we offer. Some little details about Allianz. You can see 46th largest company in the world, 5th largest asset manager. These numbers kind of change. We go anywhere from number 1 to number 5, being that largest insurance company in the world. You kind of take for granted, being in the United States, that a lot of your clients may not know the Allianz name. I'm in Minneapolis, Minnesota, where we have our headquarters for both the life and the annuities. And it's funny, if I walked outside and talked to my neighbors, they would say, you work for that Allianz company, right? We can't even get the people in our hometown where our headquarters is to say the name right. It wasn't until a couple of years ago when Allianz helped sponsor and build Allianz Field, which is in St. Paul, Minnesota, which is where our professional soccer team now plays, that it kind of brought some local knowledge of who we are to the field. But really, if you go overseas, if you're any part of the world, people outside of the United States know that Allianz name. It is very common in Europe. One of the most recently, the second insurance company ever to be led into China to do business. So if you're working with anybody overseas or that are now here, they are very, very familiar with the name. And when you're looking at the ratings, you can see ratings are as good or better than anybody else in the industry. We're here for the long term. We're not a fly-by-night company. We've been number 1. We just had the numbers come out. 19 out of the past 21 years from index the annuity side, and on the life insurance side and the independent broker space, we're looking at anywhere from number 2 to number 3 with the best selling product in the independent market space, which is, very important. Customers are now knowing about Index Universal Life. They're looking for it, and knowing that you're working with a carrier who's going to be here that really does specialize this, and we're not jumping in because it's the next best thing. We've been doing this for, like I said, the better part of 2 decades. Getting into the L part of Climb, the loans and flexibility. I feel like personally, when I do this presentation, it's a little bit out of order. I like to go in order of how we make the money, but we go with what we go with here. Loans are one of those variables when we look at illustrations that we really don't know, right? They say illustrations aren't worth the paper they're printed on because there's so many things that can happen, whether costs go up, whether you actually get the returns you're talking about. This is one thing at Allianz that we are very proud of, and our indexed loan, so that loan that you take out that continues to work for you with your policies in those indexing products is contractually guaranteed at 5%. So that is one less moving part on your illustration. 5%, it's guaranteed. It means it's 5% today. It's 5% in 30 years, 50 years. Whenever you decide to take that money out, you know that if you are taking an indexed loan, it is going to be 5%. Now, today, that doesn't look as fantastic, right? A lot of other carriers have their loans tied to the Moody's corporate bond yield, and we know interest rates are at an all-time low. So you may be showing an interest rate or loan rate at 4% or somewhere maybe even sub of 4%. However, where interest rate's going to be when we need to take these loans? Again, a lot of the designs I run are typically showing you paying premiums for 15 years, 20 years, 30 years, and then taking that income down the road. Now, again, I think we could all agree that we don't see interest rates in the next couple of years popping up too substantially. But again, I don't know where they're going to be in 10, 15, 20 years. So having the ability to know that if my policy has a guaranteed 5% loan, if rates return to a normal kind of historical average, that's going to put those variable loans up above 5.5%, 6.5%. And it's nice to know that your policy is locked in and guaranteed. It's one less moving part on those illustrations. Another thing to remember is we also have that wash loan feature that you might hear with other carriers talk about. The first 10 years of the policy, you're looking at a 1% net cost for a non-participating loan. That means if you borrow up that $50,000, that $50,000 doesn't stay in the index, right? It's in your pocket, your money's reduced. And then in the 11th year, that turns into a wash loan. So you're basically borrowing your own money interest-free. Here's the really cool and unique thing with Allianz. Because we do our own hedging internally, because we have a daily hedge and we're managing it, and your policy has its own unique index date, and you don't have this bucket system going through where some buckets have matured, some are waiting for the next month and the anniversary date. We have complete control and flexibility of your loans in terms of letting you change and choose which loans you want. So what does that mean? That means that you may start out in your 60s and take out these participating loans, which we all illustrate because they look the best. However, as you get into your 70s and maybe the market has changed and maybe you're not looking for as much risk, you don't want that more expensive loan, you have the ability to change your policy loans just like an allocation. So there's no repaying back loans. There's no going back and turning loan 1, loan 2, loan 3 into something different. Simply tell us what percentage of your loans you want to be in the fixed bucket, what you want to be in the indexed bucket, and you can make those changes on the policy anniversary date. As easy as it comes. You also have the ability to tie those loans to specific allocation choices. We have some allocation choices that aren't as popular today because we don't have a lot of clients that are in that loan phase of their policy, right? That's going to be 5, 10, 20 years down the road. But you may not want to expose your loan money out to that 5%, or if you do have it exposed, maybe you don't want a more risky or one of those index choices that may come back with more zeros, right? A 0% return when you have a 5% loan rate is a very, very expensive loan. But if you could get an index option that has a more consistent return, maybe it's not as high, less upside, but more of a consistent, stable return, so you're beating that 5% hurdle, your clients are going to have that choice and that flexibility. The biggest thing with our loans, you have choice and flexibility down the road because, frankly, they're showing illustrations today for choices they may make 30 years from now. And having the ability to change and move is going to really be key for the customers. When it comes to indexing, this is really where the Allianz difference steps in. As you look at these different crediting methods, you see monthly sum, blended, trigger, volatility controlled indexes, now rate lock and soon to be auto lock. These indexes, you probably have heard of or seen versions of these on other products that you're working with and you're selling right now. Did you know that Allianz created these indexes? That monthly sum crediting strategy was created on the MasterDex series of our indexed annuities back in 2005. I remember being on the phones, 2005, 2006, you're seeing 30% gains in the market. Things were going great, and we were getting our customers calling in and going, Paul, the market went up 30% and I only got 8 or 10%. Remember those days when we had 10% caps on annuities? Why can't I have more upside? We created the monthly sum strategy to allow customers to grab in those bull markets the upside. We were seeing indexed annuities with 20+% returns back then when clients were using it. Now, to be fair, that strategy has no floor on the downside. So looking back over the past year, a customer who is hitting up their anniversary right now would have had 11 really good months from April to now. However, they lost 20% in March, and that would have wiped out any gains that they particularly had. The blended strategy in 2008, we were looking for clients were looking for international strategies. They were looking to not have so much exposure with the market crash and everything that was happening to some of the S&P and the other indexes that were out there. We came up with that blended strategy that gave them 35% in the Barclays bond index on top of 35% in the Dow, some international exposure and some small cap exposure. The biggest one here that we talk about and we'll get into is this volatility controlled index. Back in 2013, we were in a spot similar today where we saw that 10-year treasury starting to dip around that 1% mark. We were coming up with our sub 1% playbook. Last year, we actually were below 1% in that 10-year treasury for a long time. How can we pass on returns when we can barely make returns on our side with the money that you're giving us? And looking at the volatility control index really helped us do that. It gave us an index that we use the market volatility and shift back and forth between equities and bonds between those two indexes based on market volatility. If volatility goes up, we get the heck out of equities and look to safety in bonds. If volatility goes down, we're shifting over and we're looking at the equity side of things. And by doing this, we really take one of those key components out of pricing for these indexes. By targeting volatility, we're reducing the cost and we're able to give a more consistent and stable return, even though interest rates are going down. It worked fantastic, became the #1 index on the annuity side. When we added to the life side, it was even better because of the promises and the other costs on the life insurance side. We were able to come up with an uncapped index and have a high participation rate. And even with rates and all the downward pressure we've had over the last 2 or 3 years, just like any other carrier, you're still seeing our volatility controlled indexes out there uncapped with high performance or high participation rates out there. The index lock. This was made available 2 years ago. There's nothing else like it in the industry. Your client has the ability at any day in their 365-day policy year to lock in their index credits. No questions asked. If they look today and they were up 10%, they can push a button, lock in their gains, and it is what it is. They will get that 10% credit on their policy anniversary date whenever that year comes up. There's no worrying, is the market going up, is the market going down? We had a lot of customers use this looking back over the past year, right? Like I mentioned, a year ago, we were seeing the market crash as we entered into this pandemic. And you saw the market dip 25% between March and April. Those customers that had their anniversaries in that March, April, or came in with a new policy, as the market rebounded throughout the summer, they were seeing 10, 15, 20% gains inside of their policy. Now, to sit on the sidelines and go, well, I'm up 10 or 15% right now, but I have no idea what's to come. Are the vaccinations going to be here? Is wave 2 of this pandemic happening, right? When we get into cold and flu season, I don't know what's going to happen. We had the most controversial presidential election, in history. How is that going to shake out? Is there going to be, no matter who wins, is there going to be some market shakeup on the downside? We had customers that said, I'll take the 15% today. I don't want to worry about going through the next year to get to my anniversary. And they were able to lock in those gains. And now coming in May, we're adding a auto lock feature, which instead of having to go out and look daily to see where it's at, am I up or am I even, or am I at a number I want to lock in at, they can simply state at the beginning of the year, 15. 15 is my number. If I ever cross 15, lock it in. Or maybe it's 7 or 8, whatever that number is, they're going to have the ability to lock in those gains and set that number up front. Some cool features out there. Again, the reason I bring all this up is all of these features here have been copied and mimicked by our competitors in one way, shape, or form, with the exception of that index lock. That is one thing that is unique to us because we are the only carrier that manages our own hedges. We have the ability to do that, where other carriers in their bucket system have not been able to add that to their strategy. So again, I bring this up not because, hey, we created it's the best, but because our competitors have adopted it and are using a lot of these different features on their products today. They say imitation is the best form of flattery. So we're not creating these strategies just to create new shiny things. We're creating them based on needs our clients are telling us they want, concerns that they have. Another really cool thing I'll bring up before I move on is, or as we go to the next slides, these indexes that we've come up with, we're going back and adding them to all our past business. So that means some of that business that Jess helped sell 15 years ago, they are going to be seeing these new index strategies and that rate lock pop on, which is a really cool thing. So looking at some of our index choices that I've talked about a little bit, the two that we hammer the most and we're talking about today are the Bloomberg US Dynamic Balanced Index ER and the PIMCO Tactical Balanced ER. You'll hear me refer to it as the BUDB for the Bloomberg from now on. Easy acronym to remember, BUDB ER or PIMCO ER. Both of these are those volatility controlled indexes that I just spoke about. So they have a feature that we've given an algorithm to both PIMCO and Bloomberg saying, based on volatility, move this index between the Bloomberg futures and the Bloomberg Aggregate Bond Index. And same thing with the PIMCO, you have the US Equities Future and the PIMCO Synthetic Bond Index. Again, both of them work very similarly. If the market is going down, you're going to see, and that volatility is happening, it gets up high, it's going to shift over to the bond component. This was really key for customers this past year. When we saw the indexes between March and April drop, clients that were in, say, our blended or our S&P 500, when the market dipped that 10, 15, 25%, they came back with true zeros that didn't have the rate lock and hadn't used it yet. However, because these two indexes had sensed that volatility going up, the indexes had shifted over to the bond component. And even though you were seeing zeros in the S&P, these indexes were holding with anywhere from 7 to 10% returns, and they were able to work really well. And again, furthermore, when you get into a true bull market situation, because these indexes will see that volatility is really, really low, they'll shift over to be highly weighted towards the equity side. So now, where again, I can't stress this enough, we have so many people that have bought into the S&P 500. It's been tried and true. It works really great. 70% of the industry uses the S&P 500 annual point to point. Now, in today's world, with caps dropping sub 10%, that means when you do hit a great year in one of those capped years, you're going to see that 8.5%, 9%, 10% return capped out, even though the market's doing a whole bunch more. These indexes are going to work very, very similar to the way the S&P is supposed to work. However, they're going to give you an uncapped strategy and a high participation rate. So in the worst situations, they're going to shift to the bond component and help hold up and give you some returns as opposed to zero. In a great situation, it's going to be like a supercharged S&P with that high par rate and uncapped. So you're getting really the best of both worlds in the best situation and the worst situation. And we're seeing most of our customers gravitate towards using the BUDB and the PIMCO index. Again, these two indexes also are the only options currently that have that index rate lock feature. So as we look at our blended index, which at one point was our most popular index, and up until last year, we were going a third, a third, a third between these three strategies. Because the blended currently doesn't have that rate lock feature, we're seeing a lot of customers kind of shift out of the blended index and not use as much of it. I think one of the initiatives we're trying to do here before the end of the year is to rework this index and come up with a version that would have a rate lock available. So more to come on that. We also do have the S&P 500. So if that's something you do want to use, you're absolutely welcome to use it or use some portion of it. I will tell you that we see less than 5% of our clients use the S&P 500, compared to, like I said, 70% of the industry using the S&P 500. I think the true Allianz advantage comes into the indexes that we've helped create, being the BUDB and that PIMCO index. And again, you're seeing a lot of carriers come up with similar type strategies or working with investment banks to make similar type strategies out there. And then also the fixed interest account, you have the ability to use the fixed interest account any given time. Looking at historically, some historical numbers, we look back, one of the things I mentioned AG 49 before, the regulators in charge of AG 49, the ACLI, one of their lead people on that task force, if you will, is actually the Minnesota State Insurance Commissioner. Being that we're across the street from him, he called us during AG 49 and said, "I'd like to come in and talk to you guys being one of the index leaders, both on the annuity and life side, answer some questions." And this was a piece that we came up because in that AG 49 conversation, really it was whole life carriers coming at index carriers saying, you shouldn't be able to show more than that fixed rate. That fixed rate is the best you can do. Everything else is smoke and mirrors. And when we went back and looked at our actual customers and their returns, we found this information. You can see here, the fixed rate average for all of our customers going back to essentially 2005 till today is 4.16%. That's what they could have got. However, the actual average return that they had, now this isn't best case, this could be, I sold Jess a policy and he decided to choose the third best index is how it worked out. And those are his actual numbers. So the actual returns of our clients is just below 7% at 6.9%. We call that essentially risk premium, that difference between the fixed at 4 and the indexed at that, let's call it 7, that 2.5 to 3% difference. That is what your client should expect to receive. They're foregoing a guarantee and taking a risk. Obviously, if they couldn't get more, why would they take that risk? So this is looking back and saying customers who bought policies in 2006, looking at every single year and going till today, have averaged about a 6.5% return. Customers that were in 2009 are seeing over an 8% average return. Customers in 2016, so on and so forth. So this is looking at every single policy, looking at their statement and putting that number in and talking. And again, I think this is key because you also might ask, well, Paul, what are your rates? What are your caps? How are you treating your in-force business? This is where that comes into play. It's not fair, or it's not an apples to apples comparison to tell you what today's product looks like and the caps of today based on products that were sold in 2005. The product in 2005 had a 6-year per unit charge. Today has a 12-year charge. Today we have bonuses and other guarantees and other things that just regulators and everything have made us put in, and what we've done to make our products competitive. And it really isn't fair to compare and contrast the different products. However, if you go back to 2005 and you can look and say, hey, these products that we sold are getting 6 or 7 or 8% on average, it's fair to say that Allianz has not hamstrung the caps and the participation rates and really sucked the life out of them, dropped them to minimums. These customers are still getting real returns. They're still seeing these double-digit returns, that we were hoping to see up front. And again, you heard me mention earlier, one of the initiatives was we had a lot of these policies, the BUDB and the PIMCO, and specifically that rate lock, have really come out over the past 3, 4, 5 years. So we went back and we started last year with our Life Pro Plus series, which goes back to 2011. And we added and have been adding those two indexes along with that rate lock to all of those old in-force policies. As they cross their policy anniversary date, the client's getting a letter and getting the option on their anniversary to change to the new indexes or use the old ones just like they intended. At some point this year, we will go back beyond the Life Pro Plus series into our Gendex series and our Survivorship series and add that. So hopefully as we get into next year at this time, virtually all of our clients will have new indexes available. Basically what's available today will be available to customers from 2 decades ago, essentially, and that rate lock feature. So again, taking care of old customers is definitely important for us. If you like the information on this, I will send this out to Jess when we finish. This is a client approved piece that shows exactly what I just talked about, going through, talking about what we've seen, actual returns from our in-force block of business. So as you're having those conversations with your clients, talking about setting real expectations, you can see that our customers are seeing that. Looking at where we're at today as far as AG 49s and rates go, most carriers are running around 6.5%, and we're seeing higher illustrated rates for our customer, higher actual returns than the illustrated rate. So I think we're truly getting to that point of under promise and over deliver, which is definitely a good thing. As we get to M in Climb, we're looking at marketing tools. This has become more and more important, especially post AG 49. How do we tell those stories? How do we talk about these products that have changed? And again, keep in mind, the products themselves really have not changed over the past 5 years. It's the way we can illustrate them that's being limited. So even though we're limiting to 6% illustrations, that doesn't mean you can't get more than that in the actual product. I heard Jess talk earlier about social media and LinkedIn and those types of tools. Allianz has a lot of materials available for you if you like to use Facebook and other social media outlets. We have materials. We have YouTube videos on the carrier that you can get out there. We have some calculators that you can get out. Start that conversation. And I would encourage that. Make yourself known to your clients, that they see you out there constantly dripping, talking about the importance of life insurance. That will help when you come to policy reviews and you come to meetings with them. A, they know who you are. A, they know that you're relevant. They know that you're talking about this. It's not just hey, here's the next best thing I just happened to walk across. As we look at advanced markets, this is something we're definitely trying to beef up more on. We have hired an attorney last year who's spent the better part of the last 6 months creating some concepts and presentations and really built a team around himself so we can help you more and more and more on these advanced markets conversations. Premium finance. We've been doing a ton of premium finance business. Again, it is kind of the whales out there. You want to be careful. You don't want to get away from your mom and pop business, but at the same time, if you do have high net worth clients that are looking for premium finance cases, we do have a fantastic product out there that fits into some of those needs. And also our foreign national program. This is something we've been working on for almost 3 years. Had a little bit of pause with the pandemic, but is now back up and running. So if you do have clients, we work with a large number of clients coming from the Asian section of the world, looking at China, Taiwan, that look for the stability and look for the protection that they can get in the United States. So if you go out to our website, allianzlife.com /life sales tools, I will also include that link with my email. You can get to our advanced market stuff. You can get to our premium finance kit. You can get to our foreign nationals. It is not password protected, so you don't need to log in with an agent number or anything else to get in. You can jump right in and take a look at some of our sales pieces. The one thing I learned, like I said, I've been on the sales desk and was calling people talking IUL 15, 20 years ago when nobody knew what the heck IUL was. We learned that having client-approved pieces to get in front of your customers is important. So we have a lot of materials, and most of the materials we come up with, we try to make it client-approved so you can share it with them. You can help talk about what you're trying to convey and the importance of these products. With that being said, a backcasting tool is something that we have out on our illustration software. When you look at the illustration itself, you'll see historical numbers. Doesn't matter if it's from us or from other carriers. Frankly, I'm not a huge fan of the historical reports on illustrations. We use January 1st to December 31st to show historical details. Previous to AG 49, some carriers use March, some carriers used all sorts of different numbers. There's nothing that says here's what you have to show for historical numbers. The truth is, here at Allianz, we have hundreds of different policy anniversary dates because you get your own unique. We sweep daily, so therefore your policy. If I bought a policy today and my wife bought a policy 3 days from now, we are not going to have the same index values. What the backcasting tool does is it looks at every single policy anniversary date, which is going to give you more data, right? As opposed to just one set of data for a year, it's now giving you hundreds of sets for that particular year, and it tells you what is the likelihood of hitting these numbers. So looking at a 0, what's the chance of me getting a 0? Well, with this particular index, with this particular cap, and this particular participation rate, the likelihood historically is seeing 7%, right? 7% of the time your client may see a 0. Now that might be great for them, or they may want more, but maybe they're a home run hitter, right? They're okay with a few strikeouts if they can get a bigger return. You can really hone that into what works best for them. It'll get into things like, if I do show a 6% return, what's the likelihood that I average a 6% return over 5 years, 10 years, 15 years? Now, the one thing that AG 49 has helped us with, again, it's that under promise and over deliver. A lot of times at a 6% return, if that's what you're showing, you're going to see that 15-year number jump up to about 100%, meaning you're very, very likely to see these returns. And again, this is something that's part of our illustration tool. You can add it to the actual illustration. You can break it out as a separate PDF. And again, this is something that is client approved for you to have those conversations. Another thing is our showcase tool. I'm going to get into talking about bonuses here next, but know that bonuses went away from an illustration standpoint, but they did not go away from the products. I can't show you our 40% multiplier bonus. So how do I explain to a customer that they're going to pay a 1% charge for that 40% bonus, but the illustration is not going to reflect it? Our showcase tool is also tied to the illustration software. It is not an illustration. It is essentially a little bit of an interactive sales tool. So it allows you to pick your customer's age based on 40, 45, 50, 55. It allows you to pick a couple different premiums and a couple different payment schedules. All in all, it gives you about 39 different pieces between your mixing and matching. And what this does is it gives you a sales piece talking about meet Chris. Chris is paying premiums this way for this amount of time. And with that, here's what those numbers look like if we gave you a 6.5% return and showed you the bonuses on the policies. So now you will be able to see that you could potentially get more income using these bonuses compared to some of the other bonuses that are out there. I'll include a generic piece with this in the email that I send out after this. Again, a great way to have a conversation about how to set these products up, and that the illustrations really aren't the best scenario to sell at. So with that, let's jump over to the bonus side of it. You really need to know your client and ask them the questions to figure out what is the best bonus for them. At Allianz, when it comes to our bonuses, we make them as simple and transparent as they can be. We don't want any guessing games. We don't want any formulas. If then, last year, 2 times, last year plus this. There's nothing confusing about ours. It simply is, if you choose a bonus, take your index credit, multiply it times the bonus, and that's what you're going to get on top of that policy. So if your customer is looking for simplicity, they don't want any bonuses, they want a little bit higher caps or participation rates, they have the ability to choose just the standard option, whether it's the BUD-B, the PIMCO, the S&P, or the blended. They have that option with no bonus. And again, these choices are all, you're able to mix and match them in any given year. So just because you pick one this year doesn't mean you're stuck with it for the rest of your life. They can change, and you can also mix and match any of these strategies. If you're looking for your client wants more consistency and wants a little bit more simplified, our classic bonus, 90 basis points, it's flat rate, it's guaranteed. So whether they get 0 or they get 10, they're going to get 90 basis points or 10.9. That's what they can show. This is going to be the best illustrating bonus when you run our illustrations. This does meet the rules and requirements of AG 49. Therefore, we can show this bonus on the product. So in an actual illustration, you will show 6% if you're using the max illustrated rate. 6.9 is what's actually calculating in the background because they're getting that bonus every single year because it meets AG 49 rules and compliance. We are able to show that classic bonus. So this is what you'll see defaulted on the illustrations. Our bonus and select options is what had been most popular pre-AG 49. With the bonus, you're looking at no cost, no charge. However, the client gets a 15% multiplier bonus starting in year one. So you can see, obviously, it's a little bit bigger than the 90 basis points. You know, they're going to get that 1.5. They're essentially getting 15% of whatever the index returns. So at a 10% return, they would get a 1.5% bonus. However, on a 0, they're getting 0, right? My Minnesota math tells me 0 times anything is 0. So again, a little bit more risk, but more reward with the upside. And then if they truly are willing to pay more, our select option, this was our answer to some of those high cost options that we saw out there with some of our competitors pre-AG 49. This gives you a 40% multiplier bonus and comes at a 1% asset-based charge. So we're really taking an extra 1%. Your customer is saying, I'm willing to sacrifice 1% more to send it to the options budget to get me a little bit more return. We didn't want to go bigger than 1% because we found that it really didn't make much of a difference. That 1% was kind of the number. So again, going back to that example, a 10% return would yield your client an extra 4%. 10 plus the 4 for a 14% return. Now, net out the 1% charge, and they're actually seeing a 13% credit on that money. So 4 different options. You can mix and match any way, shape, or form when it comes to it. As I mentioned before, you can see both the BudBee PIMCO blended. They all have these choices on which one do you want to use. The S&P is the only one that comes in just that standard no bonus option. They don't have the classic, the bonus, or the select options with it. So again, we try to make it as simple as possible. We have a whole lot of materials to help explain and walk your clients through how to select this and have conversations, because again, as you look at it, you're going to see 15 to 16 different allocation choices. But I think if we narrow it down to technically you have the 4 allocation choices on the left, and now we're going to pick which one of these 4 bonuses go with it, it's going to make it a little bit simpler for your clients to understand. So with that, Jess, I'll kick it back over to you. I think we have a few minutes, and if anybody does have questions, comments, concerns, we can type them in, open it up, whatever works best. So
yeah, I appreciate, Paul, and thank you. For the interest of time, what we'll do, I've got a couple of poll questions, and then if you guys have detailed questions around anything that Paul has covered, call us at the 800 number or shoot us an email. Of course, we feel like we can answer most of the questions in regards to the Allianz product details, but if we need some expertise from Paul, we certainly can lean on him, and he's great and makes himself available for us there. One thing to piggyback a little bit on some of what Paul covered, the index lock feature is extremely valuable. There are no other products out there that I'm aware of that offer anything like it. It gives you and the client the ability to look through your in-force business and see on a real-time basis what rate locks are available. I am not kidding you when I say week before last, I had an agent in Maryland who had a lock opportunity of 20% on the Bloomberg, I believe it was, and then he was at 17% on the PIMCO. So there are really great opportunities there. That is not a high watermark scenario where you are locking in that gain and that's your starting point for the next year either. You start over where the index ends at policy anniversary. So I would hit on that or look into that a little bit more, because that index lock feature is truly unique and it is awesome. Great way to lock gains.
If I could jump in real quick, if you do have in-force business out there, if you go out to the website, log in under your agent page, we make it extremely easy for you to search your policies to find rate locks or out policies that have that available. So if you go out to your website, you'll see something that says rate lock report, it allows you to pick in whatever parameters you want. So show me anything over, say, 8%. It will pull all your customers up with an 8% return currently. So if you want to make phone calls, if you want to reach out to them, a great reason to schedule an appointment. Hey, Jess, by the way, I happen to look, you're at 12%. Are you interested in locking in today? You know, you can definitely be their hero with those types of phone calls.
Absolutely. Yeah, great reason for a call. Happy clients like to refer you to their friends and family also. So good opportunity there. We are getting to the close of the hour here. I just have a couple of quick poll questions, and I do appreciate everybody hanging on with us here. Couple of poll questions I'm going to put up on the screen for you guys to answer. So we have the poll open now, is asking if we're currently writing indexed universal life. I'll give you guys a couple of minutes to check the answers on that. Looks like polls are coming in. Again, as these are coming in, guys, one thing I will tell you, if you are interested in more detail on the Allianz product or the ways Iams can support you on the life side, just give this number a call. We will be following up with you all as well. So, you know, again, call us with questions, case design, anything you might want to look at in regards to what Paul's been covering here. So we're going to go on to the next poll question here, again, in the event of time. So next poll is coming out here asking if you would like more information or would like to be appointed with Allianz Life. Another additional give, guys, as these poll numbers are coming in, Iams has created what we call our Smart Wealth Accumulation Guide. And the whole point of that guide is to be able to compare different types of vehicles in regards to taxation. So we look at tax-deferred vehicles. We look at you know, vehicles that are funded after tax. We look at qualified accounts. And we're really doing a comparison between that and the power of the cash value inside an indexed universal life. So if you're interested in that, make sure and give us a call as well. And go to the last poll question here, everybody. And this one is in regards to the Iams Top Producer Summit that I mentioned at the top of the hour. This is a great opportunity. We make these trips very attainable for our producers. We give a lot of time to hit those qualifications. And again, we make that a mark that we think can reasonably be hit. We'd love to have as many folks on there as possible. So if you'd like more information about that, make sure you're answering the poll question here. Give it about 10 more seconds. Okay. All right, everybody. I do appreciate everybody coming on today. We will be having another webinar or two with Paul, and we'll be announcing those in plenty of time for everybody to get registered. If you are interested in learning more about Allianz or Iams or both, please call us at 800-255-5055. Paul, I would like to thank you for jumping on today, and we look forward to being in touch and scheduling another one of these webinar trainings very soon.
Thank you, everybody.
All right. Thanks, everybody. Have a great day.